Welcome back. You're watching Big Deal and we are discussing the M&A trends picking up in the startup space. Now, Anuj Gulecha, we were discussing what are these M&A trends and which direction is the startup world taking. But as an investor, what is it that is taking up most of your time right now? Because there are opportunities to make entry. There is a return proposition which could be worrying the VC world right now in terms of the exit propositions. And there could be new emerging AI kind of areas and pockets where new opportunities could be developing. What is it that you are focusing most on right now?
Yeah, it's an interesting question. Returns, we are all like long-term asset investors when it comes to startups. Our assets are being held for 7 years to 10 years. So the cycles will come and go, and we will eventually end up making, hopefully. But more importantly, on the sector specific, something which is hot today may not be attractive enough for us. We need to see it pan out from a commercialization and business perspective. Today, our focus is lying on new sectors, which has not been touched by a lot of other investors. PropTech is one such sector where we are coming out aggressively, where there is no investor and there is so much innovation happening in the real estate space. The fintech is definitely a sector which is evergreen and it cuts across so many different sectors. So we are always bullish on that. We have also invested quite a lot recently in the EV space, something which has an impact. And just to give you a sense, in India, like we would be having 7 assets. And across all 7 assets, we have seen one or the other corporate, whether from India or outside, coming and investing and taking a strategic stake. So this is a general trend where impact investments, EV space, climate are taking forward our mind space. But I'll just put across, it's the era of sustainable innovation which we are focusing. Founders, investors, employees, vendors, everyone is looking for sustainable innovation, and rationalization in the industry has helped quite a lot today.
All right. So those are the important things. But Anuj, do you think that the IPO market will be as benevolent to some of the exits that you may be looking at in your portfolio going forward? And what is the next best option for exits and making returns?
Yeah, for sure. See, IPO is an exit route for a lot of us. When we enter at early stage, we tend to get different kind of exit routes in the market through secondary exits other than IPO. But when we enter at growth stage through our funds, we definitely look at IPO as an option. The good part and the optimistic part as a fund manager, I will say, is IPOs for tech startups have started happening in the last 2 years. It has slowed down because the market has not been good and the valuations were not right when they entered the market. But this year, we are optimistic of seeing at least 3 or 4 of our portfolios hitting the IPO market. Timing when it comes to doing an IPO becomes very important because it drives sentiment as well. But mind you, a company like IdeaForge, which dare I say was an innovative space, did probably pretty well. Their IPO has got oversubscribed.
Yes.
So it is a time where people, if you are entering the market with the right value proposition, right business and right pricing, you are definitely going to attract investor interest. Yes. So
you're being optimistic about at least a few IPOs coming in from the digital space in this particular year. Let me take that as a big takeaway from you. But Shaurya Bhutani, what are the areas which are still looking attractive at this point, and the goes and the no-go areas for investors in your view?
Yeah, absolutely. I mean, I think fintech and, specifically SME and consumer lending, evergreen sectors, also, quite profitable, some of them. So, the unit economics match. And given that the market has turned around and said that it's not growth at all costs, it's actually, you've got to make money. So, fintech is an evergreen sector, like Anuj said, but also one which makes money. From a global investor perspective, we are getting a lot of, inbounds around what are the good fintech growth investments to back in India. And second is, on trend as well, but I think the trend will continue is climate tech, and within that, it's really India's taken the lead in agri-tech, right? Because the problems which India is solving for are emerging market problems, and those aren't US models which can be imported. So we see a lot of the interest coming to agri-tech, climate tech, and especially, how can we grow the agri solutions in India
Yes,
and then export it to Indonesia and all of those, developing markets. So
right.
we're quite excited from a global investor into India perspective.
Right. So fintech, agri-tech, clean tech. And yes, agri-tech, a lot more needs to be done. And one of the large private equity firms had shared that they are very keenly looking at India's agri-tech space, which is still at a nascent stage right now. But Sumir, when we talk about fintech, regulatory aspects can really put pressure on a particular segment, like it has done on one part of the fintech. I won't say the entire basket. What is your view on that? And are we going to see the biggest transaction, mother of all transactions in the fintech space, where the investors are clamoring for an exit but have less opportunity?
So yes, you're right. I mean, I think fintech is one space which has got three double whammy, more than a double whammy, three whammies hitting it one after the other. COVID was good for pretty much most verticals because the digital transformation took off. Happened for fintech too, but collections and other things led to fair bit of a red on the balance sheets. And then there has been regulatory as a big issue, right? And if you look at the deals that are happening, some of those deals are actually essentially companies which raised a lot of money for a particular business model which no longer exists, and now they are looking to change. So, for instance, many companies raised fairly significant lot of money based on credit card as a model for consumer lending, and then RBI regulations stopped it. So you've had unicard buying companies, and you've had slice buying companies. Maybe FabTech might buy something. BharatPay, for its own reasons, is also part of P2P lending companies. So these are essentially companies with capital buying using M&A as a mechanism to fix a business model which got spoiled for no fault of theirs in some sense, right?
Yes.
So yes, this is definitely a trend in M&A that we are seeing.
Right.
In fintech, especially, this is a sustainable trend, if you ask me. Because,
right. All right. So important points there, but we have very little time. And Anuj, just a final word on two very important points right now. First of all, the governance angle, and some of your portfolio companies have also come in the middle of a storm because of that. So how is the governance aspect developing? Is this downtime giving a lot of time for the startups to really go back and overhaul their governance aspect, and how is VC really taking part in that? And second, very important point, in a PharmEasy kind of a situation, it's mere 2,500 crore rupees of debt, because of which the company is almost getting a white knight strategic investor, right? So Anuj, is there an IBC kind of a code or something that can be developed specifically for the startup world, if you have any insights on that very quickly?
Yes, there is an interesting analogy which we tell to our startups. Are you a ship or are you a pirate? See, you cannot be on either side when you are startup, because early stages you are focusing on innovation and you may not even know what the word governance is, but you cannot be a pirate and ignore everything. And you cannot be a ship from day one as well. It has to grow in a sustainable manner and a systematic manner. Is the eyes of investors and founders coming back on corporate governance being a very important aspect? Yes, it is definitely. I would say it's not just us, but the government is also now playing a very,
all
very
right.
important.
So government is also focusing on that. And my question on the solution for a debt-laden or the recovery of the stakeholders from a startup which is fighting for survival. Any thoughts on that you can leave us with? 30 seconds for that.
Yes, I think there is time to achieve that, but I will say more importantly, investors need to play a very important role, and more so equity investors have to play an important role.
Yes.
When it comes to such things. We've seen such examples, yeah.
All right. So you left it at a very good note, and I would go back to the story I broke this week that the investors played a very important role in stitching together a transaction, which is not just bringing in funds, but probably a more experienced hand and a strategic hand in the PharmEasy transaction. Thank you so much, Anuj, Sumer, as well as Shaurya, for joining us on Big Deal. And thanks to all our viewers for tuning in. Stay tuned to CNBC TV18.